All right, so you received a 1099 for the first time and you're wondering, how do you file your taxes? Well, in this video, I'm going to cover that topic. So if you continue watching, you can expect me to share my iPad here. I've drawn some stuff out for you that I want to share with you and answer the questions about how the income is taxed. And how it's taxed depends on whether you formed an entity or not. Maybe you formed an LLC or a corporation. If you didn't form an entity, we're going to cover that too. What your tax classification is. You may not know. Don't worry, I'm going to answer that here in this video. What tax forms does the 1099 income go on? What are the taxes due, including when are the taxes due, including accounting for extension. So you'll know by the end of watching this video maybe how much you might have to pay and when you have to pay those taxes by. All right. So you can see here I've got my iPad pulled up here. And so I've already sketched out some of this stuff for you. So I've got at the top here 1099 income. So just so you know, 1099 income means you're a business owner, whether you realize it or not. If you received a 1099, specifically that 1099 slash or dash NEC, which stands for non-employee compensation, you are now a business owner. So the way you handle this is the same way that any other business owner would need to handle this. So you see I've got these green arrows down here, right? What that's kind of representing is that's your income. That's the amount of the 1099 that you receive, the amount listed there. That's going to be the income to your business. So you might have a few of these 1099s, right? You're going to add them all up, and that is going to be sort of the green arrow here. That's your income. Now, how this all kind of works is it kind of depends on the entity that you may have created for your business or not. And if you didn't create an entity, that's fine. I'm going to explain that to you. Basically, if you didn't form an entity and you just started, doing work for, I don't know, Uber or DoorDash or whatever, whoever's giving you this 1099, then you are a sole proprietor. Okay, that's sort of your type of business that you formed, even though you didn't go to the state and do that. You are a sole proprietor. But if you actually, were thinking about this for a while and you formed an entity, then you probably may have established what's called a single member LLC with your state. Single member just means there's one member on the LLC and that's you, okay? Or you might have formed a multi-member LLC. So you went to your state, you formed an LLC and there's two members on it, two or more. That's a multi-member LLC. Or I don't think many of you did this, but just in case, you might have formed a corporation at your state level. So you went to the state and you formed a corporation, a C corporation. That's the entity type, right? So you might be a sole proprietor or a single member LLC. That's probably the most common here. Let's scroll down a little bit. Next, you have tax classification. So depending on what your tax classification is, that's really how you determine what tax forms you have to fill out, when those taxes are due, and things like this. So it's important to really know your tax classification, not so much your entity type, okay? So if you're a sole proprietor, guess what? Your tax classification is also sole proprietor. You cannot be taxed as any of these other forms that you see here. If you're a single member LLC, by default, you too are a sole proprietorship. What I mean by that, when I say by default, I'm saying you formed a single member LLC at your state. You did not file any forms with the IRS to tell them you want to be taxed any differently, then you're going to be taxed as a sole proprietor. What you may have done as a single member LLC is you may have elected to have that LLC taxed as an S corporation. So that's down here. All right. That would be using form 2553. So form 2553, and you elected S corp status. Partnership. If all you did was you went to your state, you formed a multi-member LLC, then by default, you're taxed as a partnership. You can elect to have a multi-member LLC also taxed as an S corporation by completing that same form 2553 again, okay? And then for a C corporation, by default, again, I'm saying you went to your state, you formed a C corporation, you didn't file any other forms with the IRS, then you're going to be taxed as a C corporation. But a C corporation can also file this election. It's going to be a bit of a stretch here with this arrow, but it can also be taxed as an S corporation by filing form 2553. Okay, I've got another video on YouTube on whether you need to file form 2553 or 8832. So maybe watch that video if you have confusion about that. But that's not what this video is about. Okay. So now you might have a better understanding of what your tax classification is. And based on your tax classification, now I can answer those other questions about what tax forms, when do they due, what taxes might I have to pay, all right? So let's keep working here with this example. So tax classification, sole proprietorship. Well, in a sole proprietorship, you're going to file your income taxes. You're going to show your 1099 income or your other business income on a Schedule C, okay? Schedule C is part of your personal tax return. That's what PTR stands for here. It's personal tax return, but it's a separate schedule that's included in your individual tax return, which is typically on Form 1040. That might be a term you're familiar with, all right? So your 1099 NEC income is going to end up landing on Schedule C, and Schedule C is part of your personal tax return. There's not a whole separate business tax return that you have to do for a sole proprietorship. It's a Schedule C that's included in your personal return. Okay, what about if you're an S Corp? Well, if you're an S Corp, you're going to be filing a business tax return, okay? So it's a separate tax return from that of your personal return. It's a business tax return, and the form is called 1120S. Do a Google search for 1120S. That form will pop up. Partnership, similar thing here. It's a business tax return separate from that of your personal return, and it's going to file Form 1065. So you put that income on Form 1065. And if you're a C corporation, that is also a separate business tax return. That's going to go on Form 1120. Again, you can Google any of these terms, 1120S, 1065, 1120, Schedule C, and you can see what all these kind of forms look like, okay? So now we know, what entity you're formed, how that entity is probably taxed from a tax classification standpoint, and now we also know what tax forms that income goes on. Let's talk about the due dates real quick before I hit up how much tax you might have to pay. So the personal tax return, you probably know this one already. The due date is April 15th, typically. Okay, if there's a holiday or something like that, it gets pushed to the next business day. But it's typically April 15th. You can file a 6-month extension. You need to file that extension prior to April 15th. And you can then have until October 15th to file the tax return. Okay, business tax return, specifically the 1120S, similar thing, but different dates. March 15th, 1 month prior to that of the due date on the personal tax return. So it's March 15th, you can file a 6-month extension. It's now due September 15th if you file that extension. 1065, that's the partnership tax return. Same thing as the S corporation tax return. March 15th, and by filing an extension, September 15th. And then you have the C corporation here. These due dates on the C corporation is similar to the personal tax return, April 15th, and then with an extension, October 15th. So that's when the taxes are due. Now, let's talk about when these taxes or what kind of taxes you might have to pay, okay? So I'm going to scroll up to give us some more room here. Taxes paid for a sole proprietorship, right? We're still on the sort of sole proprietorship example. What happens is on the profit of your business, you have to pay self-employment tax of 15.3%. And then you're also going to pay probably federal income tax and state income taxes if you're in a state that has state income tax, okay? So let's say you made 100 grand in profit. Your 1099 income was 100 grand. And let's say you had 0 deductions, right? That's probably not the case, right? Let's say you made $125,000 in income. You had $25,000 of expenses. Then you're going to have $100,000 worth of profit. Well, you're going to pay about 15% in Social Security and Medicare tax. That's what SE stands for. That's what self-employment taxes are, Social Security and Medicare. 15.3%, so about 15 grand. Income tax, your income tax is going to go through the tax brackets that apply to the federal income tax rates, your taxable income. It's going to flow through the various tax rates, right? So you have the first tax bracket, I think, is like 9 or 10%. Then some of your income is going to be taxed between, 11 and 12%, and then 24%. You get the idea, right? So not all of your income tax is taxed at a particular rate. It flows to the various tax brackets, and that's how much income tax you have to pay. Okay, you might have something similar at the state level, right? I mentioned that. 1120S, the S corporation tax return. What income tax does it have to pay? Well, it works a little bit differently. You see the asterisk here? You're going to pay FICA tax. FICA is just another word for Social Security or Medicare on the salary only. Okay? What do I mean by that? I'm saying, hey, we said you had 125K in income, you had 25K in expenses, that left you with 100K in profit. Well, now you're going to split this 100K into a salary and distributions. I don't want to talk too much about this. I've got other videos on my YouTube channel about this, so you can search for those. But basically, you're going to pay, let's say you did 40K salary and 60K distributions. You're going to pay FICA tax, Social Security and Medicare, of 15.3% on the salary portion only. Okay? You're still going to pay income tax on the 40K and the 60K together. You're still going to pay income tax on the $100,000. That works. The income tax portion works just like it did in the sole proprietorship example. Okay. The only difference really here is that the Social Security and Medicare tax you pay is on the salary only, which was that 40K. All right. Partnership tax return. You see this term SE again, self-employment tax. So same thing. $125,000 of revenue generated by the partnership, or maybe you have a 1099 that is that large. You had $25,000 of expenses, so you got $100,000 of profit, right? This 100K is the same sort of 100K from here. That's the profit number. Well, if you got a partnership, then you probably have more than one person, right? You probably have a partner. So this income will basically be split in half, maybe 50K to partner one. Let's put P1 and 50K to P2. All right. So on the 50K to partner one and partner two, you got to pay self-employment tax on your share of the profit. Maybe that's 50,000 in our example. So 15.3% there. And then you're going to pay income tax as well. Income tax, once again, is going to go through the various tax brackets at the Fed level and at the state level. You might be in a state that A, has no income tax, or B, has a variable tax rate similar to the federal tax system. Or you might be in a state that just says, hey, all your income is taxed at 5%. So it's sort of a flat tax at 5%. Okay. So again, partnership tax return, you're going to pay self-employment taxes on your share of the profit, and you're going to pay income taxes on your share of the profit at the federal and state level. C corporations, okay? These are not very popular for small businesses, but there might be some scenarios where you might have a C corporation. A little complicated here, but let me do my best to go over this somewhat quickly. So you're going to pay FICA taxes on the salary. So similar to the S corporation, you have to take a salary, or you should take a salary for your C corporation if you're trying to get money out of the business. So you're going to pay the 15.3% on the salary portion. You're also going to pay your regular income tax on the salary portion. Whatever profit is left in the business. So let's say we had 100K in profit. You paid yourself 40K in a salary, right? So that's gone. And there's 60K left, I should say. Well, you're going to pay 21% taxes. The C corporation itself is going to pay the 21% in taxes on the remaining profit. And then the remaining money that's left, if you want to pull that money out of the C corporation, then the shareholder typically gets paid that via a dividend. So there's an additional 15 to 20% taxes that is paid here. So that's kind of the double taxation term you hear. It's, hey, C Corp's paying at 21% flat rate, and then the shareholders are taking money out of the business via a dividend and paying another 15 to 20%. Okay, so the C corporation thing probably doesn't apply to you if you're watching this video, but your 1099 income is taxed just the way any other business income is taxed. All right, you're going to put it on the appropriate tax form depending on your tax classification. So I hope you found this video helpful. If you want a deeper dive into these concepts about S corporation, partnership, C corporation, you can check out the other videos on my YouTube channel. This was just trying to explain that to that first time business owner or that first time person receiving a 1099, what do they do with this income? Where does it go? Where do they claim it? And how much taxes that they have to owe, the due dates, etc. All right. So if you found this valuable, do me a favor, like it, share it with an entrepreneur, subscribe to the channel, and I'll see you in the next video.